Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for September 4th, 2010. Okay, as you already know, the market has some pretty incredible 3-day rally. Just by looking at this, you can tell the market is a little bit tired or a little bit overbought short term towards the upside. Anytime you have some incredible rallies like this, the market tends to get a bit stretched out towards the upside, as we will see later on an hourly view. But overall, the market more or less stalled at this next resistance level. I've always mentioned that gaps always make for pretty strong resistance and support levels, and prices stop right at the top of this gap right here. At the same time, it also created a support gap. So, there's still a decent amount of resistance that the market has to break through before it can clear this 113 area. But at least now we are much closer to it than compared to down here. At the same time, you also have a downward sloping line that the market stalled right at the top of this line right here. So, again, there's a reason why technical analysis works, because they stop at certain strong resistance line, certain gap areas, and these are things to pay attention to, and they also make for great targets in the long run. But overall, if you just look at the market, let me just clear some of the lines out. We're more or less still stuck in this big range right here. As long as the market stays in this level, this is basically no man's land. This is where you have to be a little more cautious and don't want to over lean or lean too much towards any one direction. Not until the market is able to clear above here or clear below here, then sure, we can lean more towards the either the downside or towards the upside. But here, this is where you have to practice good account management, trade management, portfolio management, and really take profit whenever you can. Basically, take profit near resistance, or maybe buy some stocks near support. But either way, you should keep your trading pretty relatively light while the market is in here. And when the market is range bound, it can create a lot of whipsaws while it's in there. So going into a short-term view, you probably don't need me to mention this, but I'll do it anyway. The market, as you can tell, is very overbought, and you can see that it's very far away from the moving averages. So the probability of it coming down next week is much higher than the market continuing up. Okay, so you always want to weigh out the probability of what's going to happen next. And as I mentioned, you have this prior resistance area, the 111 area, which SPY basically stopped dead on its track right around the 111 area. So what I'll be looking for next week is, you want to see how the follow through behaves. We know that the market rallied higher. Okay, that's great. But what's going to happen afterwards? Is it going to pull back a little bit, find new support, and then bounce higher from there? Or is it going to create some kind of reversal sign and actually plow through support levels? Okay, so that's something that you want to pay attention to.